Hi, today is Saturday the 28th, end of the month, and it was a short week with Thanksgiving and markets closed on Thursday and closing early yesterday. And if I go back to my previous outlook, I was kind of bearish on the 22nd for the beginning of the week, and the market actually didn't break the lows around 35.40 and never actually reached the 35.15.20 area. So it stayed very much directionless. And on Wednesday, started grinding up again. This is a 4-hour chart, by the way. So this is probably an outlook that is fairly good for the next 2 days here. Let's say up to midweek. So the market should still keep grinding up, as I mentioned last week, unless the Black Friday sales figures are bad. Generally, we go into some kind of Christmas rally. So I think the chances of the market dropping are lower. And if we look at VIX Central is basically back into contango, flattish contango, but still contango. So I don't think there will be any major surprise in the next few weeks. If we now look at the VIX itself, well, there was kind of a spike. There was a bit of a spike down on Friday. But overall, the market stayed above 22. That was a support that was found valid last week, and then spiked down on the 24th, and really it's dwindling further. Now VIX is around 20, so yes, volatility is low. This means that Vega and VOMA can start playing nasty for Vega sellers. But overall, I don't see the Vega really shooting up. We can maybe watch, of course, the VIX is mean reverting, and we've had a huge drop since the election day. So we could maybe see a bounce, or so going back to 25 would not surprise me. Now, if we look at the daily chart on the VIX below the August low, so it looks like the market or the general financial environment is moving on to a post-COVID. Of course, there are tons of debt. Markets are very hesitant. Bonds yield absolutely nothing. There are changes in the overall market situation. Even pension fund managers now have to try and generate some profits, moving some of the huge bond positions to stocks, to equities. So markets is changing. I mean, this is a zero rate environment. And let's not forget that early 2018, Vermageddon or Vegageddon. So we have to still remain cautious about where we position our Vega in our trades. But now, even for vol traders, I would say that even here, the trend is your friend. We should hit the bottom. I mean, this is really, really low considering the overall situation. Traders may also want to look at the IV versus HV, and as you can see, the 30-day HV is above IV at 10. So for short-term traders, there may still be some opportunities, but overall, this is not the best environment to sell premium. It's actually probably a good time to buy some Vega. So good time maybe to start preparing hedges, buying teeny puts just in case. I mean, this is something we can discuss. Okay, so that's it for the bold picture. And if we then go back to here, okay, the 4-hour chart is looking like we are going again, unless we have some adverse information, either on geopolitical front or economics, we could just keep in this same trading range. So I would say 35, 10, 15 to 36, 80, which is basically a range within the range. This range is definitely defining movements in the next few days. So I would say 34.40 to 37.50. If we look at the longer term picture, here we have a clearer view of the bullish momentum that market wants to go back to recent highs, and it may even go for the strong resistance, which is also here 37.50. We have a stall level which is around this area. So in terms of momentum has been very fast since the elections. It's kind of petering off now, but I mean, it looks like it could hit stall level, if not the strong resistance level. That the stall level is not a level we watch very actively, but when the market moves up very rapidly, yes, we do. Let's not forget that just not even a month ago, we were about 400 points lower. So yes, bullish momentum, and we will see whether bulls are bold enough to really take it to strong resistance. At this point, I don't see it, but of course, the market is always full of surprises. So now let's move for a shorter term outlook for Monday. I mean, this picture is probably clearer. We have a narrow range here, 36 to 36.80. The market closed really in the middle. So I would say if you were even looking at 30 minutes chart, the pivot would be around here, and the market will have to determine whether it's more comfortable on the higher side than the lower. I would say the bullish momentum will fade out, and the market should go back to this range, 36 to 640, if not Monday, maybe in the next few days. Before closing, I want to show you this SPX VIX correlation or anti-correlation. And we see here, I mean, this has been updated with Friday's close. We see that the VIX correlation is almost perfect. I mean, it's almost minus 100%. And we see that the last VIX from Friday, shorter session indeed, is closer to the high quartile. So as I said, it looks like we're going back into a normal range. So correlation being good, we'll see in the other video about the trades that's more interesting to put your negative vega on the upside, on the call side, with due caution, of course. So it looks like we have a relatively predictable market, at least correlation versus underlying. The only thing that is a little bit abnormal is that instead of using a correlation, we use a covariance. And covariance, we see that generally when it goes ballistic, something is changing in the market. Sometimes it's, of course, in line with correlation. And here we have a good anti-correlation, but we've got covariance going ballistic again. This is not normal. It's now about minus 700. I actually clipped the bottom because this one in March went really, really low. And this can be explained by the market going up when volatility started dropping fast. But covariance gives you more of power because it's not a bounded calculation from -1 to +1. So it looks like volatility has dropped disproportionately to the rise in the market. Market has risen, but volatility has dropped too much. To me, it's an indication that we have to be cautious because there could be a revival of volatility or maybe volatility stabilizing, let's say around 25 with the market dropping. But I would say the market has really gone too fast into post-COVID. So again, a conservative trader, I look at many things outside trading, and it is just a little word of caution. Okay, that is it for now. I wish you a great weekend, and the next video will be on the current trades. Bye for now.